Hi, I'm James Dunn. Welcome to the Inside Network.
I'm going in depth with Matt Swieconek, Head of Investment Relations at Findex. Welcome, Matt.
Thanks for having me.
It's a real pleasure to have you. Matt, describe for us Findex.
So Findex is a diversified financial services business. We've got 110 locations across Australia and New Zealand. We are involved in wealth management and accounting services. We manage some $17 billion on behalf of clients across Australia and New Zealand.
Now, Matt, you started with 3 people. You're very close now to 3,000.
Yep.
Can the investment philosophy or the firm's philosophy stay the same as you grow at that rate?
Absolutely. It was designed with this scale in mind. So the investment philosophy is one that's primarily centred around capital preservation and then coupled with the attainment of real growth over and above that for client portfolios. And that's really something that's been scalable and at the forefront of our minds ever since the outset and the inception of our business 30 years ago.
And is culture also difficult to maintain at exactly the way you want it when you grow so large?
It can be difficult, but if you stay true to some core principles and really focus on your people and the culture of the business, then that can really bear fruit for you over a period.
Why is the MDA structure so important to how Findex manages portfolios?
The MDA allows us to adapt to changing market conditions, and which is particularly important at present, and allows us to provide a consistent outcome to all of our clients, irrespective of what risk profile they fall into.
Going back to your investment philosophy, why is Findex such a big believer in adding unlisted assets to portfolios?
Well, we understand that the unlisted asset market can provide a source of, if chosen correctly, unlisted assets, the correct ones can provide us with a good source of stable, reliable returns without the volatility that's necessarily associated with listed markets.
Does there have to be a liquidity trade-off to gain those attributes?
Yes and no. There is certainly illiquidity that's associated with some unlisted assets, but if coupled and balanced appropriately with listed assets, then it's not necessarily too much of a trade-off.
What about that broader debate about listed v unlisted in markets, including super, where sometimes there's a contention that being unlisted can actually mask the same performance issues that are being borne out more quickly in listed assets?
Look, that can be the case. Certainly, if we're looking at our client portfolios, they are typically long-term in nature, where we're investing on behalf of clients for 10 to 20 plus years. So irrespective of whether there can be some valuation differences in the short term, that's really immaterial to our thinking because of the long-term approach that we take.
With a fund like the Alcyon Australian Property Fund, you get access to a broad range of assets in one fund. Why the diversified approach over, say, sector specialists?
Well, we don't view our value in selecting property segments within our portfolios. We leave that to the experts, people like Alcyon, to manage a diversified portfolio. We entrust them to determine which segments in the property sector are of the best value at any given point in time, whether that's commercial, property or office. We leave that in the hands of the experts to make those calls.
How active is your dialogue with Grant Atchison and the broader Alcyon team? And I suppose I'm asking, does their input influence the broader portfolio at all times?
Look, we've had a long-standing association with Alcyon, and they've always been very proactive in terms of their engagement with the Findex business, always been very open in dialogue and transparent. Certainly they do offer us their property insights on a regular basis, and we do take these into consideration when we're forming our asset allocation views within our portfolios.
How has the fund performed within the Findex portfolios, and what do you think it's really added to your clients?
It's been a really strong performer. We've been very pleased with the performance over consecutive years, and it has offered us really strong risk-adjusted returns with strong income, over 5% for a long period of time, but also with that stability of capital return without that volatility that we necessarily get with a purely listed vehicle.
Now, it's November at the moment, Matt, so 2023 is just around the corner. Looking at 2023, which asset class has you the most worried? But conversely, which asset class are you most excited about in 2023?
Well, probably given the way that interest rates are so uncertain at the moment, fixed interest would be the asset class that falls into both of those camps. There is certainly excitement around our fixed interest portfolio and how we can be positioning those to take advantage of interest rates. But then on the flip side of that equation is concern around whether inflation will run further than we're anticipating at the moment, which could potentially backfire. So it really is making sure that we're keeping on top of market movements and what's happening from a broader macroeconomic perspective.
Matt Swieconek, thank you very much for going in depth.
Thank you very much.